Let's talk about Dough's newest market update this week, and let's have a look at what this actually means for the company moving forward, along with some other recent announcements that have happened as well. Now guys, if you do want an in-depth video into Douugh, I've done that already, so you might want to watch that first to get some context. There's a link in description and there should be a pop-up somewhere here as well. Hey guys, my name is Fyzee and this channel is about finance and investing. Before we begin, this video is not financial advice. It's not a buy recommendation. We're speaking in a very general sense only. I just have a passion for investing and finance, same as you, so let's get into it. So starting off with the company's share price, we can see that on the day of the announcement, the share price increased about 6.25% on the day, and then the next day afterwards, on Friday, the share price increased by about 3%. And on that day, the share price closed at 17.5 cents, and this makes the total gain in that period of around 9.5% in that 2-day period. However, if we compare the stock price to where it's been historically, we can see that it is trading at a significant reduction based on its previous highs. So let's look at some recent announcements from the company. So on the 8th of March, we saw an announcement from the company where Douugh is partnering up with Rakuten, which is a Japanese company that gives cash rewards to its customers for shopping through them. Now, this is going to help Douugh because Rakuten Advertising has a large affiliate network and they also have a dedicated fintech division as well. And a company like Rakuten is absolutely no stranger when it comes to helping out fintech companies like Douugh, because they've actually worked with a lot of finance companies in the past. And currently Rakuten is already working with around 60 finance related brands right now, so they definitely have the expertise to help out Douugh and to drive customers to Douugh. Now in the past, Douugh has already outlined that affiliate marketing is going to be a huge channel for them moving forward when it comes to customer acquisition. So this is definitely a step in the right direction, and partnering up with Rakuten should see more app downloads coming through in the next couple of months. And we'll get into this in just a second. Now, it's also important to note that this partnership is only for an initial 12-month period to see how things go. Now, a few days later, there was another announcement on the 11th of March, and they talked about how they're adding virtual debit cards in the app through MasterCard. So basically for the customers, their debit card is going to be instantly available through the Douugh app, and the customers can basically view all of their debit card details in one place without actually having to wait for the mail to come. So this means that they can start to spend right away. Now, because of COVID, I'm sure you guys know there has been a huge change in terms of how we pay for things. And personally, I've seen this as well in a lot of restaurants and shops. Sometimes they just don't want to accept cash and they're taking card only. Similarly, in the US, some areas are waiting up to 10 business days to get the card in the mail, which is just ridiculous if you really think about it. And COVID has really caused a lot of delays due to lockdowns as well. Now, even in Australia, we experienced this briefly when Australia Post was absolutely inundated with orders and the mail was taking quite a long time to come. Now, fun fact, if you guys didn't know, Australia is actually further ahead than the US when it comes to adopting contactless mobile payments. So as the US becomes more digital, Douugh is well positioned to take advantage of that. Alright, now moving on to one of the more recent and important announcements for the company, and this was on the 1st of April. Douugh was granted a license to launch the wealth management service in the US. So basically, Douugh has been granted an RIA license, which is a registered investment advisor license for the US. And we have something called an AFSL here in Australia, which is the Australian Financial Services License. So given this license, Douugh should now be able to offer wealth services like their wealth jars that they've spoken about quite extensively in the past. And essentially, there's going to be different jars or different accounts for stocks. So you've got stock jars, then you've got crypto jars, even retirement jars as well. And they call them jars, but these are basically like separate accounts. Now, this was one of the more crucial things that actually attracted me to Douugh in the first place, because if you really look at it, traditional banks allow us to set up accounts like checking accounts, transaction accounts, savings accounts, and they love to give us offers for home loans, credit cards, personal loans, but oftentimes traditional banks don't really help us to invest our money and actually grow our wealth. And because people are not investing, they're leaving their money in the bank, which is not really working for them. Therefore, people are not able to get ahead with their finances. So for Douugh to come out with a solution for investing and managing their finances at the same time, I think it is a pretty good combination. Similarly, banks are a bit cautious when it comes to crypto, but then you have Douugh, who is outwardly embracing crypto by having a specific crypto jar. Now, since DOU is targeted at Gen Z and millennials, and I like to think that we are pretty interested in cryptocurrency and blockchain because it's pretty exciting and it's a new technology. And basically it really fascinates us, and I think that it has tremendous potential. So for DOU to capitalize on this, I think it's pretty good. Now guys, just a word of caution, although this is great, it's only just recently launched and we do need to see some traction coming through in the next couple of months because wealth jars are one of DOU's main value propositions. So we do need customers to use it as much as possible so DOU can generate subscription fees and annual management fees from that as well. Otherwise, it's not going to be able to pay off. If this can be successfully embraced in the US, this will validate the product, and when this actually launches in Australia through the Goodman's acquisition, we can be fairly confident that it can do well. And additionally, if customers can start to deposit their salary using the DOU app, that is a huge metric that the company is banking on as well, because this will essentially increase the likelihood of people using the investment jars. Now finally guys, looking at the company's most recent announcement, which was on the 8th of April, DOU is saying that they are building strong momentum in Q3 and they're pretty much set for Q4 as well. Now all around, this is a fairly positive announcement, but I will talk about some things which I find a bit concerning. But first, let's talk about the positives. Looking at the card spend, we can see that there is a massive 645% increase quarter on quarter, and the compounded monthly growth rate sits at 173%, or the CMGR, which is very phenomenal if we think about it. So we are seeing more and more customers use the DOU debit card and embracing the app. Looking at the deposits, the increase is 553% quarter on quarter and the growth rate is 155%. And now customers are starting to deposit their salaries into DOU's app as well. And the company is also looking to bring out new initiatives to prompt more people to deposit their salary. So this could be in the form of email marketing or email prompts to customers to prompt them to put their salary into DOU's account, or something like app notifications to customers talking about the benefits of actually depositing their salary. The customer growth rate was 259% quarter on quarter and the CMGR is 89%. Now guys, I don't know if you can see it in this graph, but the customer growth rate from February to March has just slowed down just a tiny bit. Now, although the growth quarter on quarter is triple digits, so we can't really hate on that. However, if we look at the fine print of this announcement, DOU did say that they were expecting 5x growth in this quarter, and this figure of 260% is nowhere near the 5x growth. So why is this the case? Well, this is because of the impact of COVID. So essentially, plastic card manufacturing was affected, which means that customers can't get access to their physical debit cards. So in response to that, DOU had to slow down customer acquisition and fast track the launch of the virtual debit card, which we spoke about earlier, to kind of have an alternative for the customers. So because of that, the customer growth forecast was not met. However, the company is pretty bullish on customer acquisition in Q4. Now, they also mentioned one other thing which I think is pretty important, and that's the fact that they're feeling pretty confident when it comes to dialing up the marketing spend to increase acquisition and activation rates, and they are roughly aware of how much they need to spend to get a customer, which is very valuable because now they have past data available. Now, looking ahead for this stock moving forward, a few areas of growth and a few catalysts could be the Australian launch of the DOU app. Given that they've acquired Goodman's, they should be able to roll out wealth jars for Australia and the app itself, so Aussies can get access to it as well, which I anticipate will really ramp up customer onboarding. So we should start to see these numbers increase pretty rapidly once that happens. In terms of how well that translates into the stock price increasing rapidly like we saw earlier, I can't really say much on that and I can't comment too much on that. And to be honest, I'm not too worried as to what happens to the stock price in the short term because I'm investing in the company for the long term and currently I do hold shares. But guys, make sure to do your own research before investing in the company. Don't just buy the company because I'm buying into it. Please do your own research, and this video is not a buy recommendation at all. So guys, I do apologize if I sound a bit biased in this video, but if you did enjoy this one, check out this video, which is an in-depth analysis of DOU, and it talks about the company's overview, what they actually do, its financials, and my in-depth opinion on the stock. And guys, please like and subscribe, and I'll see you in the next one. Bye now. Now, DOU has already outlined that